Alright, in this video I'm going to cover a new set of tools that I have recently started using named Ninja Orderflow Trader, or NOFT for short, developed by Kai Whitney. Before I get any further though, please read the disclaimer at the beginning of the video and know that I'm only going over one or two aspects of trading here, and by far cannot cover everything necessary for you to know to trade real money. This is for educational purposes only. Alright, that's got the legal stuff out of the way. We'll move on. All right, here's a picture of the guy that helped develop this indicators. His name's Kyle Whitney. He's been a trader for Swiss Bank and Bear Stearns. He's helped to put these big institutions put their big orders through the market, and he has experience on what the institutions do to get their orders in. You know, you just don't take 1,000 contract order and put it into crude. It would just run the market up if you're buying, or if you're trying to sell to get out or sell to get in or whatever. It just run the market one direction or another. So he knows how they get in and how and so forth. And he's designed this indicator to be able to help him recognize where they're getting in at and where they're defending their places at in the market. All right. So if you want to learn more about him, you can go to this website here, or its website and a email address here, but globaltraderoom.com, and then his Skype address for his Red Bridge Capital. And then I'll talk more about this near the end of the video. And I'm going to try to move along as fast as I possibly can, because I've done this video several times and it's running over an hour or so. We're going to try to shorten it up quite a bit if possible. All right, on the left is my the indicator package, or part, not all of it, not all the indicators. I just have, I think, 2 or 3 on here. I have the pressure indicator. I have what I call the footprint here, where it measures aggressive buyers and sellers, and I have the delta, and I have volume on here. Now this pressure meter, it just measures the aggressive buyers versus the aggressive sellers, and the market's closed right at the moment, and I can set it to 0, and at any time, at any moment, I can set that to 0, and it will start telling me who's being more aggressive, the buyers or sellers, from that point on until I click it again. All right, that's what that pressure meter does, and it's a separate indicator that I've just plotted onto my chart there, onto the side. It takes the information from the time and sales window, as does the footprint chart here. All right, I also have an 8-range chart off to the right here, and I'll get into more of that in a moment, how I use it in my trading. So let's move on. I'm going to talk more about auction theory and how that works to get a basis to work on. First thing I want to do is bring over this chart here. And you can see from here we have the price up and down here, and the bar is off right off to its left, right there, and it's measuring for every price level what the aggressive buyers and sellers are. So right here you can see that there was 28 aggressive sellers on the left and 69 aggressive buyers on the right. Now again, market's closed, so you don't see much here on the limit orders. This is the DOM from NinjaTrader. DOM stands for depth of market, meaning how many limit orders is on the sell side, how many limit orders is on the buy side. All right, and so this guy here will say, or whoever, this person here is selling, it wants to buy, or wants to buy 7 cars, we'll say, at 93.04, and this person here wants to buy 1 car at 93.07. All right, as long as they hit it's a limit order. That means this guy wants to sell at this price or higher, and this guy wants to buy at this price or lower. So there's 2 prices in the market. Usually we have a little tighter spread. There's 1 tick spread between here. Usually it's just there's just 2 ticks there, and now we got like 3. So, but usually it's 93.05 to 93.06. So it's usually 2 prices. What the buyer's asking is still 2 prices. The buyer's asking 93.04, or to buy, he's wanting to pay 93.04, and the seller's asking 93.07. So there's always 2 prices in the market, not just one, not the last. You always see it listed the last price, but it's not that way. There's always a buyer and there's always a seller, and they're in there with their limit orders, meaning they're not going to take no less. He wants this or more. He'll pay this or less, the buyer. So there's two prices, and it's always from left to right. We'll get that here in a minute. Now, that's maybe most people know that, but it's real important to know the depth of this, understand it deeply. All right. So each one is registering the volume of aggressive buyers and sellers. Those who are wanting to, again, if this guy is going to buy at 93.04, if he really wants to buy, and he's got to come up to the seller's price. Therefore, he's got to come and pay the ask. He's buying at the ask. So he's got to pay up. He's being the more aggressive one. If the seller really wants to sell and really wants to unload them car or this car, he's got to or she's got to come down to and pay the bid. So he's being more aggressive, and that's what this order flow chart's showing. Who is coming up to the bid, who's coming up to the ask, and who's coming down to the bid. All right, remember, up and down. All right, let's get that out of the way again. So that's what that represents. Okay, here's another, like I said, you can take a snapshot of this or stop the video and study it a little bit. It just goes over the same information I talked about before, and to help you out if you want to study up on it a little bit more right there. So stop the video on that. All right, let's move away from that. Let's move away from this. All right, next slide here. Remember, I told you that the buyer, if he really wants it, he has to come up and pay the ask. If the seller really wants to unload it, he's got to come down and pay the bid, what the guy is willing to pay for it. All right, this is what this measures when they're not placing a limit order, they're getting aggressive, they want to pay up. So the indicator that is in this toolkit doesn't measure. Most indicators measure from right to left, or measures these two numbers here diagonally, horizontally, I mean. And this one here is diagonally on it. So this is the ask side again, the sellers, but this is the buyers are coming over to the seller side. So it's measuring buyers coming over and paying up. So that's what the volume it's measuring. Is this 88 aggressive buyers? They didn't get in with limit orders, they didn't get out with limit orders, they got out or in with a market order or buying at the ask. Same thing here. These guys on this side here, this measures here, they got out or in with aggressive, they sold at the bid, what they was willing to pay. So who's being more aggressive? That's what it's measuring. When them aggressive buyers come in there, that's what moves the market. It has to eat up them limit orders that's placed in there. So this is what this is all about. How eating them limit orders up to go through. Somebody has to be, if you're both got limit orders, neither one of them is going to make a trade. Because if I want $100 and he wants $200 and neither one of us gives, there ain't going to be no trading going on. One of us has to give in. All right, so this imbalance, I look for imbalance. So I'll show you in the indicators here in a minute what this is on this. So 1072 by 191, this is a tremendous imbalance right here. Sellers really come in strong at this price level, whatever that price level might have been. All right, you can also freeze that. All right, here's one I made for an imbalance to the upside, and this is what I look for, is I look for stacked imbalance. As you can see here, there was 36 by 17, 9 by 84, 7 by 63. All this was an imbalance in price of better than I think 1.5 or 150% or better. So when I see a stacked imbalance like this at a critical level where I'm looking to get in, I'd be placing me an order to get in as soon as this candle completed. Now that's how I trade. Now there's other ways to use this other than that. All right. Okay, again, I don't know if I covered this or not because I've done the video so many times. The reason I purchased this is I liked it because I could use 8-range chart. I could use 8-range candles on it. You can use any, as far as I know, I haven't tested all of them, but I've done volume, range, minute, and tick. And I'm pretty sure it'll do day and week and stuff as well if you want it that big, a big a candlestick to do this on. All right, so that's one of the reasons I purchased it, one of them, and that it could show me the imbalance in price as well. So this is 8-range candlesticks. Now I'm going to go inside this and show you the settings, and how you can adapt them to fit whatever works for you in your trading. All right, indicators, and I'm going to try to do my best. So I don't really know all the settings. This particular set is called the NOFT, and they got Orderflow delta histogram, which is this delta right here, and delta tracker, which is this over here I got on here, and ghost blocks, which I think are stacked imbalance. I'll have to check on that as we go down through here. And so we're going to click on the sequencer, and we're going to look at the first indicator is called the auction. And what this does is the auction isn't finished. It draws this color or whatever color line you'd like. You can change the color out from it. So many, I guess, as far until it's took out again by a price. And let me show you what I mean by that. All right, I'll go up here to where turn on the auction, and it's going to show me where there was some unfinished auctions at. And I'll explain what an unfinished auction is. First of all, let's go right up here, and I'll scoot over to the side where you can read it better off the price. 93.44 was the high made at this point in time. It came up, and we had a 0 by 9 up here at the top. The 0 indicates that there was no more sellers willing to pay up at this price. If they had a limit, if they were sitting with limit orders at 93.45 and they were just dying to get in, they would have come down and they would have placed an order to sell at the bid, and none did right there. So that was 0. All right, and where there was 9 aggressive buyers came up and paid whatever the seller was wanting right here. But this was sellers wanting to get in or out right here, and there was none of them willing to do it. So that was a finished auction. There was nobody left in the selling department willing to come over to the buyer's side and sell to whatever the buyer wanted. All right, so the buyers had no more sellers at that point to do it. Whereas, I know right there's one. I don't know why it didn't show it, but that should have showed that right there. Okay. Let's look at one here. Here's one to the downside. I showed you one. Let me show you one to the upside so I won't confuse you. If I can find one. Here's one right here where a candlestick was completed. The candlestick has to complete before this will show up. There was 19 aggressive sellers still willing to come over and sell to whatever the buyer was offering at that point in time, and there should have been 0 to finish that auction out. All right, as price moved on down, price will usually come right back to that right there to complete that auction. Right here was one on the downside, and the 0's on the downside then, because then we got aggressive buyers. These sellers were coming down selling this thing, and they need to fill these limit orders. They need a buyer to come in and continue to push this thing down. So buyers didn't come in there. There was no aggressive buyers coming up and paying whatever the seller was asking. So that finished that auction out. As for right here, there was 2 aggressive buyers willing to come over to the seller's side and pay whatever the seller was asking. So that auction was unfinished. So it moved up and came back down, and so this will be a target for these unfinished auctions. Like if I'd have got in short right here, this could have been a target right here, knowing that it should finish this auction. I know that there was still buyers down there. And this is a theory of how it works, and what you look for is patterns. How often does this really occur? And you can go through here, and you can see here's one from way back. Let's take this one here at 93.15, and it got took out, and it's probably going to come back and take these out. You see right here. Here's one here, way over when it comes back down. There was an unfinished auction at this price here, 92.05. There's one down here at 91.86. So theoretically, price should come back to this price sooner or later, because there was still buyers willing to come in and do it. There's 10 of them here. 10 buyers come over to the seller's side. So that was considered an unfinished auction. Okay, I think I've spent enough time on unfinished auctions. I think you understand. I hope you understand it. Go back to indicators now. Sequence tracker. Let's go to the next one. Block trades. All right, you can set the color anything you like. You can have it fade from one start collar and fade into another collar if you like. I have the line. I think this means the line will go out 50 candlesticks. I believe that's what that means. I ain't sure about that, but I think that's what that means. But I do know that I need somebody coming in the market with more than 19 contracts in one order for it to be considered a block trade. Now, I can change that to anything I like. Like it was in the ES, I might put 100 in there instead of 19. All right, now whether I want it to be on both the sell or both or sell or buy, I could just set it for buys or sells. All right, now it's block sales. Let's go up here and I'll show you up here again. Block trades right here. And it showed anything that had a block trade of greater than 19 contracts put through the market, it'll extend the line out from it. Right there. Okay, that's what that does. All right, indicators. I'll try to run through this as quickly as I possibly can. Okay. All right, candlesticks. This is just like in the data series in NinjaTrader. You can go in and set the color of the candlesticks and so forth. I don't think I have any collared ones anymore. No, I've done away with the collar. I did have them a shade of red and a shade of green at one point, but I'm using range bars and I can easily tell which one's an up bar and which one's a down bar because they're range bars. So I collared them all silver so I can easily see inside the bar what the bid and the ask is doing on the aggressive buying and selling. But you can change this to any collar you like here. In collar, you can also have it start with one collar and end with another collar. You can make it real pretty. Pretty don't make you money though. All right, the COT. That is the highest volume in that bar. This blue right here, over here at 90 to 240, that was where the highest volume took place in that bar. Right here is where the highest volume took place in that bar. And here, and that's important too, of knowing is where is the volume continuing to step down as price moves down, or is it moving up and so forth to tell how much momentum it has and so forth. There's patterns you can find out by looking at that. Row displacement. I think, COT I covered. I think row displacement has to do with maybe you put a star or something between the bid and the ask. I'm not sure. I've never fiddled with that at any point in time, so I'm not sure what that does. Settings. For the delta, negative red, this is going to be for, I believe, this number over top here. I'm not sure. I believe that's what that's for. And the font, magenta, red, green. Okay, because the trade and balance I got down here is green and red down here, so I don't think it's that. All right, so but anyway, you can change the colors. I got the color of magenta on the numbers that aren't out of balance or out of balance by 150%, what I got it set at. So I can see them. That's basically my eyes could see them as well with the different colors I'm using. All right, stocked imbalance. Let's work on that now. I believe this has to do, I've got it set for, I thought I had it set for 3. Stocked imbalance. Okay, I got it set for blue. I'm still working with this. Like I've only had this 30 days or so now, but I believe it extends the line out 50 candlesticks, and out of a stocked imbalance of ever how many there is in a row, there has to be at least 500 contracts in all that stocked imbalance, and then it'll put a blue line out from it. I believe that's what it works. So let's go look at that real quick. All right, it puts a collared line, and I know that you can change these collars to transparent or something else if you want to, but what it's showing, I haven't got to the imbalance part on that yet, but all this here was a balance of more than 150% from the 1 to 26, 21 to 42. So there was aggressive selling. The aggressive buyers were 150% greater at each two price levels here for this to have been a bigger font and turn green, and then it projects the stocked imbalance when we're stocked right on top of each other. It will project this out in front of it, so you'll know in the future that where these imbalances was and so forth. And if it's a sell imbalance, they should be a red ones down here, but it was an up day most of the day. So I don't see no red ones anywhere, but if it was red, and you can make them any color you like as far as that goes. So let's block zones. All right, let's go to nothing. All right, let's go back to indicators again. Sequence tracker. All right, we've covered settings, stacked trades. All right, trade imbalance is my most one I like to work with the most. I've got that set for dark green and dark red. And it shows up in here as dark green, and over here some dark red ones. And I got the font larger than the magenta ones, the ones that aren't out of balance by 150%. Now I can change the 150%. Right here's where you change that. I can make that 250%. I can make that 300%. I've never tried it, but you can probably make it 225%. I think you can put in there whatever you like, pretty much. So like in the ES, you might want to put, 400% or something. It depends on what you're doing and trying to accomplish. But you can adapt it to fit your needs for whatever market you're using. All right, trade size, again, we're back to 50, and it has to be 99. It has to be more than 99 contracts traded in trade size for it to plot this line right there, plot this deep pink out from it. Star color, in color, and stuff. And let's look at trade size up here and see if we got anything. I may have it set too high. I don't right here some. There was some trade size right here and some trade size up here at 92.50. So it also tracks trade size, and you can adapt that to any, like I said, any setting. Where was we? Trade balance, trade size. You can put that at 50, you can put that at 500, whatever, the trade size you want to do for it to draw that line and stuff. And this is more Kai's understanding of how he's using all this, because the guys in the room that are doing this, I don't trade like they do, but they're using like 3 and 5 and 6 tick stops, and I'm using a 12. So I don't, but they're going for smaller targets too than I am. So all right, we've covered all that. All right, now let me think what's next. Okay, now I'm going to go over a little bit of how I trade, so you'll have a little bit of background on what I'm doing here and how I trade. First thing in the morning, I'll come in and I'm going to look at weekly, daily, 144, 89, 55, 34, 21 range charts in crude oil. And I'm going to determine the market state that morning. I'm going to determine, am I going to have a trending up day, a trending down day, or consolidation day? I'm not always right. I don't have to be right all the time. I've got other fail-safes in place to take care of that with money management and so forth. But anyway, if I pick an up day, if I think it's going to trend up, I'm only going to wait for pullbacks and buy on pullbacks to the upside. I won't take no sell orders. I won't go short, in other words. If I believe it's consolidating, I'm going to wait till it gets to the very edges of the consolidation area, and I'm going to buy on support, and I'm going to sell on resistance. All right, as it tests these areas. I won't trade in the middle of the situation. All right. If it's a trending day down, I'm only going to sell. All right. If I got resistance above me and I'm wanting to sell, if it's coming to a day break, and I don't know whether I'm going to get a breakout or if it's going to trend up or what have you, and it fades it, I'm going to watch the order flow along with momentum, along with volume, along with the delta and so forth, and I'm going to measure the energy in that move to tell me if it's going to fade that line, it's going to test that line, it's going to do a stop run on that line, or it's going to do a stop run, pull back, and what was once resistance becomes support and move higher. So I'll be able to do this by watching this new indicator I'm using, plus candlestick patterns and so on as well. So same thing with a support line here. If it fades it, test it, and so forth. All right, remember, you can stop the video at any time, read this. I look for these candlestick patterns at these areas to determine what's going on. I'm using an 8-range chart, so each one of my, for my entries in this particular, what I'm talking about today, these will all be 8 ticks in range. All right. and you can stop the video and look at that. One for support as well at the bottom. All right, now I also use 8 range engulfing candles. This is a short, if price had been coming up and it come up to a level that I've determined in my morning prep, whether it's a pivot point, a prior high day, a swing high on a daily chart, or whatever, if it comes into that area, that's when I'll start looking for this candlestick pattern or those other candlestick patterns. I don't care if they appear anywhere else. I won't take them. They have to be in an area or testing some kind of a support or resistance level. If I get a green candle that completely engulfs the red candle, if I get a red candle completely engulfs the green candle, then that's an indication for me to go short. I have an indicator that tells me that if this candle closes on its lows, it's going to turn red because it's a range bar. And I have an indicator that tells me what the next tick is for this candle on both sides, and I can put in a precise order, and that way I always have a 12-tick stop, assuming I don't get no slippage on my entry, and I usually don't because I use a stop limit order. And sometimes I get jumped and I don't get in the trade. But anyway, same thing if I'm looking to go long. If this candle is going to close on its highs and engulf this red candle, it will turn green, and I will have an order in before that. I'll have it placed in the market beforehand because I know that this candle has to close on its highs to turn green. If it closes on its lows, I'm never going to get filled anyway. I'll cancel the order. All right. And let me bring over the, well, it's an 8 range ES, but still, here's that indicator right here. And it's an ES chart, but still, it's doing the same thing. It's telling me that if this candle closes on its highs, it's going to close at 2,000. If it closes on its lows, the next tick, it's not going to close on 2,000. It's going to close one tick below that. It'll start a new candle at 2,000. This one will start a new candle at 1997.25. So that's what that indicator does for me right there. And I have nowhere, I don't know if I got that from Big Mike's trading forum or somewhere, but I don't know where that indicator come from. All right, now that we got that all established, this is Thursday, Thursday, September the 11th, 2014, 9/11, and it's almost 6 o'clock here p.m. Eastern time when I'm doing this. All right, this morning, price came down, broke through the prior low of day, pulled back, and give me one of those candlesticks that I showed you earlier. That's one reason that I would like to get in. One of the other reasons is it came back up against the prior, this support became resistance. And I was getting a dimple of on my stochastic indicator. As price moved up higher, this thing moved on lower. So that gave me a little divergence there. Plus, there was no volume being put into that move like previous bars that I'd seen. So those two things told me to sell. Now over here it's the same time. This time is 5:50 in the morning, 10 to 6 Eastern time, and I got and this one is not the right one. So let me pause and get it to it. All right, here's that high volume area that I told you about, it being blue, where the most volume took place. I like to see that in the top 1/3 of an 8 range bar, and it's really on the edge. I'd like to see it at least a tick higher. Because over testing, I've seen that when I get those, that's usually an indication that price is going to move lower on me. I did not get the trade imbalance I wanted. I only had one. I like to see them stacked in 3s. But I did have several things going for me on that short on this. And I would have also been watching, and this is the order flow, this candle as it was being made, I'd been watching the delta up here, this number right here, and this bar right here represents this number here in a graphical configuration. I would like to see a wick here on it so that would show me the high water mark. I would like to have known that there was like 200 buyers in here, and then the sellers came back in and, on the delta and pushed it back down to 78. That would have given me a wick, and I'd have known that right there. But you can tell that as you're watching the flow, the orders flow into the market. You're watching this delta, and if it was up to say 200 on the delta there, and then came all the way back to 78. Then I know the sellers had took control, and I'd be in at 91.17 right there. And on the next bar, we did have a little bit more selling come in on the next bar, but you see it retraced almost back up to the high right there. All right, let me pause to the next one. All right, I was watching it come down. I had a blue line at the time. This line would have been solid. I dot them after they get busted. It would have been solid. It coming down. It was a swing low off of a higher time frame. that I've drawn up, and I make it go to all charts. It came down. I got the candlestick I liked. I didn't like the momentum at that point, and but I did get a great deal of volume come into the market at that point in time right there. So I seen that, and this is and the time was 6:46, and this candle right here is this candle, but there was not hardly any aggressive buying coming into this market right here at all. If anything, it was more of an aggressive selling. So not much of a confirmation there. Again, I would have been watching the delta to know if this would have been like 200 negative and come back to 114, then maybe I would have got in there. It's like I say, the flow of the orders coming through. If the delta didn't confirm, I need at least 3 things confirming this trade, and I really wasn't getting it on it. But the stochastic indicator wasn't getting it. I was getting good volume coming in. But I'd had to see the volume was the aggressive buyers, and I wasn't really, unless the delta was showing me that, this volume had to be aggressive volume of buyers, then it was going to roll back over, or most likely. All right, let me fix this real quick. All right, pause and find the next. Okay, the next one's just right here at 7:18. Again, I've been watching. Pause a moment. Okay, got a phone call. All right, again, I'd had to have good delta. This would have had to been in the red and move back up to 9. And we did have the stochastic indicator oversold pointed up. We did have the volume wasn't coming in very strong at all there on that up move right there. Now, what I will tell you is, as this moved over and consolidated to this side here, that's when I would note. At first, I had a really good stacked imbalance sell to the downside, but it got cut off right there. And then it made another attempt to the downside to make another lower low, and it got cut off again. All right. And let me make sure I've got the right time frames. 7:40, 7:01. No, I've got the wrong time frames. All right. 7:18, that phone call throwed me. 7:18 right here. I don't know that I took this trade or not without watching the flow of orders coming through to see this. Like I said, it would have to have been down in the negative numbers, this delta, and then came all the way back up to 55 for me to take it, because there wasn't enough stacked imbalance for me to take this, though I did have a good indication with this engulfing candle here, but there was one back here as well that failed, you see. All right, but when it got into this, and I remember this because into this mess here where it started going sideways, that's when I want to watch. Who's being more aggressive in this mess right here? Who's being the aggressor in all of this? Right here we have 3 aggressive buyers in here, and when we have 2 stacked imbalance, 2 stacked imbalance, I like to see at least 3, and then right here we have 1, 2, 3, 4 stacked imbalance, and then we have only 2, and then 2 here, and we don't even get pushed back down to the lows again. So I got a good bounce to the upside, and then I got 2 and 2 here, and then I get another good run with the buyers coming in again right here. So I've got stacked imbalance with 4 here and 4 here and another 4 here. So I'm seeing 4 and 4 and 4. So I'm seeing the buyers coming in hitting it a lot harder than the sellers. Give me an indication that the buyers are the ones that are going to win this out. Not necessarily so, but that's what I'm seeing at the moment. I'm seeing more aggressive buying, and then, but when we punched up here, we had a couple aggressive sellers up at these highs and pushed it back down again. Then we had some imbalance right here, pretty good imbalance. There's 4 aggressive sellers there, and then another 4 aggressive sellers here. And you could have took this trade on up here somewhere right around 90.69. 90.69. Where was that? Right about right in here in this candlestick right here. You could have took that long because you could see that the buyers were being just a little more stubborner than the sellers and all that mess there. Okay, now that we broke above the prior low of day, nice clean break, I'm thinking, it should move higher because we broke back above the prior low. If it stayed below it, I'd be more looking to sell, but if we broke above it, it'd be a little more looking to buy. When it broke up and then broke back down into this area right here and started consolidating again, let's see who had the, let's see what was going on in that area there. The first breakdown, we had nice aggressive selling all the way down into the breakdown. Then it got cut off and a few aggressive buyers come in, no stock imbalance. Right here, we had some pretty good aggressive numbers, all 3-digit numbers and 3 stock imbalance. So that's giving me an indication, hey, this thing's going long. That was in this candlestick right here, 1008, 1008. And then we had some stock imbalance and the sellers pushed it right back down again. And then we had some aggressive buying come in, but nothing managed. But when it broke out to the upside, the buyers had clear control when it took to the upside. So if you can use this in your trading somehow, all right, but it only went a little ways before it backed off again and then punched higher. All right, and then again, we had triple-digit numbers coming into the market on the aggressive buying. And it was, 55 to 139, 55 to 105, 82 to 139. So there's 4 stock right there in a row. You definitely didn't want to sell. Let's put it that way. If there's nothing else, don't sell. All right, let me pause. Okay. By this time of the day, it was getting to be about 10:30. Usually we get a 10:30 reversal, so I was kind of keeping that in the back of my mind. And we're moving up through a high volume area. That's what this green line represents. I have drawn on the line. These red dotted lines were support levels that got busted. Prices come back up through them again. So what was once support can become resistance. So I was looking here, but we had nice strong selling all the way up to the pivot point. Then I got one of the candlesticks that I like. Inside that candlestick wasn't really a lot of aggressive selling in my COT or high volume area right there. This wasn't really high enough, but you can see it worked out to a certain extent. Now on this little pullback right here, we did get some aggressive selling come in here, stocked imbalance. I thought, maybe I'm not looking at the right one, 1028. Yeah, no, wasn't really enough stocked imbalance in that as well. After it broke down out of that, got complete, the whole candlestick was stacked with imbalance on stuff. Now let's see what happens in this little cluster of pullback right here at this point right here, 1044. More sellers in that bar, more aggressive sellers. Still more aggressive sellers, but still it got cut off. That means the buyers were absorbing it. More aggressive sellers. And finally, there wasn't really nothing to tell me to get in here other than at the last moment, the aggressive buyers did come in on the situation. All right. And we moved up here, and I think it's pretty much the end. No, it went on up to the prior high day, and we went through the prior high day. All right, I think that basically covers it. But this is what I look for. I look for the stocked imbalance in the trade to enter the trade for myself at critical levels. I hope this helps. Oh, we got to go over how to find out more information about this real quick. All right, you can go to redbridgecapitalconsulting.com. You can write this down or go to Red Bridge Capital in Google and it'll bring you to it. And if you scroll down, you can learn more because he's got several videos here listed of different traders use it and how they use it and so forth and everything. And they use it a lot different than I do. So you might want to check that out. You can also, no, that's not right. Go to YouTube and use your Traders Magnets videos and find out more. And what have I got here? Oh, that's something I did for somebody else. Okay, and also I'll plug my book while I'm here. Go to Google, punch in D. David Casto, and a couple books will come up. It's the D. David's Trading Plan and Template and Guide, and you can click on the book. And there's a pretty good bit of free stuff in here that you can read and stuff. But anyway, I cover everything from how to pick a broker, how to choose a trading educator and what to look for, how to your money management and so on, and how to test out a trading plan. Anything I could possibly think of concerning trading, I covered in this book. All right, that'll conclude this video. I hope it helps in learning about this new indicator. I like it real well, and we'll try to do some more for you.